All right, a lot of people here. Okay, so let's get to this. We know market is in range, right? We can see from the last few days, we have formed this range. Okay, just roughly going to draw this. This is what we want. We want range to get tighter so that the contracts get cheaper. So when the range gets tighter and tighter, the contracts get cheaper. When the contracts get cheaper, we get all those good trades from AI where we get the SPX trades, the SPY trades, and our profits are a lot bigger, right? But when the market, the contracts are super expensive, AI is not going to send out a trade that is like 100 points away because it's looking for prediction, right? AI is based on prediction. So if the prediction is like 150, 200 points away, let's just say the prediction is 50 points away and the contracts cost like 2,000 or 3,000 per contract on SPX, that's too expensive, okay? And if the SPY, the contracts are costing more than $2, $1, $2, $3 out, that is way too expensive. So AI is also looking in the combination of prediction and the contract price to alert you, okay? So the first thing is the prediction. When the AI sends you a prediction, for example, AI is saying, let me just bring this up here. When the AI is saying, 560 call, it's looking at the prediction and it's looking at the price of the contract to send you alert. When you see the market is, the contracts are very, very expensive in the market and everything costs a lot more. When you see the prediction like this, think of it that we could get close to this price, like we probably could get to 558, 559, but don't fully expect it to go to 560 because also consider that it took that trade because the contract, also the price of the contract, because it's set up so that way people with small accounts can also take the trade. Okay, so when it took this trade, you see what happened. We had this liquidity. So I'm going to break down why we took this as a scalp and why we got out of the trade rather than holding under the trade and for trade to work out and maybe the price would have gone higher. Okay, so two things. So let's just go into Bookmap real quick. Okay. So this is where that liquidity was. So all these numbers you're seeing, these are orders. Okay.
I
The
think you're sharing
higher
the wrong screen.
what?
I think you're sharing the wrong screen. You can still see TradingView, not the book map.
Oh, you could not see the Discord.
We can't see the book map. We can see the TradingView's chart.
Okay, but I was just showing you Discord right, earlier. Did you guys see
And
that?
No,
nope.
it's been on the SPY chart the
Oh
whole
my
time.
God, nobody told me. Good job, guys. You're all fired. Oh Lord. Wait, I wonder. Hold on, how do I change this? It says share your screen. Okay, I'm sharing it. What about now? Let me know
Yeah.
if it's good now.
Yep.
Okay. All right. So what I was showing was the Discord. Okay, I'm going to go back to it. What I was showing was that on regular days, if you like go back, let's just say we go back, like when should we go back? Right, whatever. Okay, so we're right here. You see, contracts were cheap. SPX contracts were cheap. We were getting these trades, easy 70%, 200%, 300%. We were getting these puts, going up to 9, 10, right? And I think like March, everything started getting expensive, but let's go back more. Pretty sure like in February was also cheaper. You see like how we had all these trades, 58, 50 put, 180, and these are going to 5. And SPX 4, it was at 4, we went to 10, 150, going to 2. Okay, so we know the SPX trades pay more. Even in some of the SPYs trades, we're doing pretty good, right? So you see 330, we're going up. And so lately, we're not getting those trades, okay? The reason we're not getting those trades is because everything is expensive, okay? So AI is considering based on the account sizes of people as well. It knows that, some people have expensive accounts, some people have big accounts and some people have small accounts. So it's considering, when it sends out a trade, it considers the prediction, okay? Because this is a prediction where it thinks it's going to go, plus the contract price, okay? So that way it's affordable and everybody can get it. When the market is in sideways action, okay, or if in the market is where the contracts are very, very expensive, think that the prediction, the price is going to get close to it, not exactly towards that prediction. Why? Because since the contracts are expensive, it's also considering that I need to find something cheap, where people can make some profits, okay? So what happened with this trade is that it sent out 560 calls, so maybe we could have hit 558, 559. But how we maximize that is we look at Bookmap. So the only thing you want to be watching is Bookmap, and the other charm I share the pictures here, and I will go over that soon too. So how you can combine both of them together. So the trade came out, and the trade came out right around this area, and there were some buyers. Okay, price started going up, and then sellers started coming in. Okay, sellers started coming in, and when a lot of sellers come in, you see this color. This color will start change. It will go from this white to yellow to red. Red means that's the most amount of sellers. Okay, yellow means that there is decent amount of sellers, and the thicker that cloud gets, that shows you the amount of sellers there are. Okay, so when you see, and you can see that based on this value here. Okay, you can see this value here, that there was a lot of sellers compared to the buyers. Okay, so there were some buyers that stepped in, and then you can see that a lot of sellers are stacked up here. Okay, that means the sellers don't want the price to go higher than this, and the sellers are coming in to make sure the price doesn't go above this, and it rejects from here. Okay. So when we look at the stock market, we already know the sellers are in control. And how do we know that? We can use some things like EMAs. I'm just going to show you the bigger picture, the 50 and 200. We can see that the price has been rejecting the 200 EMA. We have been going up, and this is the momentum is still holding. Okay, so the 50 and 200 EMA on the hourly, those are really big indicators for telling you the momentum of the price. And the momentum of the price is showing you that we are in a downwards trend. Okay, you can see we're bouncing on the 50. We even went up to the 200 near there, rejected. And look how, like, every time we have gone up there, we have rejected. Yesterday, same thing. Today, we started going up, but the momentum is still holding. Okay, so when you look at the bigger picture, we can clearly see there's a downtrend. Even if we don't look at the EMAs, we already know that the downtrend, because every time we are going up, we are coming back down. Okay, so when we look at our psychological levels, okay, because one thing you have to remember is every 10 points, so 560, would be considered a big psychological level, right? Okay, and the next big psychological level will be 550. In between 550, 560, you would have your 555. Okay, so these are two of the biggest psychological level, and this is the middle psychological level. It's not exact, but you get the point. Okay, so yesterday what we were having was we were on the 10-minute, we were trading around the psychological level, right? We were going down, open, we're closing, open, and we were just going down, and we were creating all these games that they were being played. We know the longer picture was that they wanted to go down, but they are playing games. And why they're playing games? Because when the premiums are high, they want to trap both sides, and that's what they're doing. So lately, this is what's been happening. They have been trapping, and then later they will make their move. Okay, and then they go up, they buy cheaper, okay, and then they bring it down, and that's what's been going on. And the reason they're doing that is because when the liquidity is drying up, when you're going into the sideways action, that means liquidity is drying up, and stock market doesn't know where they want to go next. So what they do is they will keep the price in a range. They will go up and they will go above these levels and below these levels to trap more people to create more liquidity. Because think about it, on regular days of the market, when you're above these liquidity levels, sorry, psychological levels. Hold on one second. Sorry, guys, this question. Okay. All right. Sorry. All right. When the premiums are really, really expensive and the contracts are expensive and the liquidity is drying up and, we're not getting any good price action and they're trapping people. So the reason they're trapping people is to create liquidity. Okay. So price will go above these psychological levels, $1 up or $1 down. And the reason they're doing that is to trap people. So we want price to be now, since the price is trading above or below these levels, we want it to be actually more lower in order for us to go to the next range. Okay. So when the price was above here, we wanted actually the price to be trading above these levels in order for us to go to the next range. But since we would go up and it would just come right back down, if you just look where the sellers came in, right, this big candle, we went up, sellers came in again, and then, sellers just started coming in around this area. So you have this area where all these sellers came in. So it's telling you that every time we go into this zone, right, sellers keep coming in, and this is all just a trap. Okay, until we don't clear out this mess or clear out this long wick of sellers, it's going to be just trap. Okay, until we don't clear out this 50 EMA and we spend some time above 50 EMA, we won't be able to go and test the 200. Okay, so once you have analyzed what the market is doing and you know that the trend is downwards, and you know that every time we are going up, they're just grabbing more sellers and bringing the price down, right? Then you know that the games are being played. So right now we are coming down and we are right back in this area. So how are we going to analyze if we're going to dump to 550? Okay, first thing is we want a close below, but we want it to be a little bit further away from 555. Okay, so if we go 555 and we are close below, then we can expect down, right? But then you also look at something called SPX. Okay, SPX is also near the psychological level. Okay, so we have the every 50 points is a psychological level, right? So we have the 5500. Okay, and we have 5600. Okay, we go back, we can see that we came down to, and then every 25 points is your other level, right? So it would be 5575. Okay, and we can see that we went up, we're coming down. Okay, we went down to 5525, but we haven't tested this level. Okay, so this is a pending level. Every time you're going up, you're coming down. So what does the market want? Maybe the market wants to test this level. It keeps coming down, but it's not breaking, right? And now if we go back to SPY and we go look at the hourly, we can see the same thing. We're getting these massive wicks and we've come all the way down here, but we haven't tested this level. Okay, so everything is showing us that they want down and they want to test the big levels. Okay, if these 555 and 560s have been tested multiple times, then why isn't the 550 not getting tested? Okay, because they want more liquidity, and algos are probably waiting for more buyers to step into this area before it goes down. So in order to trap more buyers here, right? Let's just say you are a buyer and you bought like $50,000, worth of position here. Okay, just giving example, and your stop is right here. Okay, And if your stop is here, they're waiting for your stop to get hit. So all those buyers, when those stop gets hit, it adds into liquidity. If you're long and you get out of the position, the shorts will take over and then you go down even more. Okay, so a lot of people are in margin and they want people to get margin called, so they know where people's positions are. So all they're doing is just going against them, grabbing more sellers, and then going down. Okay, because we know sellers are in control. So if sellers are in control, they want to buy it cheap. They want to buy it as cheap as possible they can. And let's just say 550 is the last stop that sellers want to go, right? And if the range is getting tighter and tighter, and they're like, you know what, 550 is the last stop we're going to go, and we're not going to go below 550, then another reason is they will be able to keep the price pinned here. And what they will do is they will start exiting their positions, right? They will exit their positions and create a pump, okay, to grab more liquidity and just play around here and just exit their positions in between these buy orders, okay? So that's another thing they can be doing, because if you think about it, they have been in these positions for a long time, okay? And they have to exit their positions. To exit their positions, they have to create liquidity, and they're creating these liquidity and they're exiting their positions, right? Are you guys understanding what I'm saying? Any questions so far before I continue? I guess no questions. Okay, I'm just trying to teach you so you can think how the market works and what they're trying to do. So when you go in the morning, I want you to spend at least 10-15 minutes to just look through the hourly, SPY, SPX, QQQ, and analyze what's happening with the market. You know, who's in control, who's in control of price, what are they doing, how long they've been in the trade for, and why they're doing what they're doing. Okay. So we look at the 10-minute candle, and that's what we follow to take our positions. So now if you see, we closed below, and instead of natural price action, our normal day would be once you close above a major level, sellers come in, and then you have a nice candles, 2-3 candles downwards, and you'll go to the next liquidity. Okay, that's what it is on a normal day. But since it's not normal, we are just going up, grabbing more sellers, coming down, maybe say sideways, and then dump. Okay, so now we have closed below this, but we haven't closed under SPX. Okay, but we are going down. Okay, so you see, we would go down and then we're just coming back up and we're going up. So this could be a trap, right? How can you take a trade here knowing that all the games that have been played? So the best bet is to go a little bit more lower and go a little bit away from the price. Okay, so let's just say if we break all of these levels and we go above, lower the price, then we can take the trade. Okay, when the market contracts are expensive and when we're having the sideways action, you want to wait. All right, you don't want to be taking a trade right after it closes, because you know that they will play games. And look what's happening, they're playing games again, literally. Go to SPY and what's going on. Instead of respecting price to go down, you know instead of respecting price to go down, it's not doing that. It's just because they're playing games, because we can just see that day after day that's what they're doing. They just go down and then they just go back up. Okay, Mike, you should not be taking anything right now because you are learning, and I'm literally explaining that you shouldn't be taking this trade. But it's okay. Just if you just took starter, then you just need to watch the 555, and just watch the 555. As long as we're under, we are fine. Okay, so that's that. But SPX is still playing games, but it's only 11:30. The contracts are still expensive, so maybe they want to wait a little bit before they before they dump it. Okay. But as soon as you see that price is going lower, then that's your confirmation that we're finally going down. Okay. But if you look back and you look at the wicks here, these are insane wicks, right? Like look at this. We went down and we tested this level, right? And buyers came in. So always remember the biggest candle that you got, you will see the same kind of reaction. We went down, we came here, and we saw a similar reaction. Okay. And then now this area, we went and we came and we saw a big reaction. This time we came, we didn't have a big reaction, maybe because the buyers are slowed down. Okay. So always remember the first touch. When you see a big reaction, right? Especially on the hourly, when you see a big reaction, expect the buyers to still be in that area because not all orders get filled. So since we had this wick, the wick went all the way down, right? Last wick was all the way here, right? 552, and we went up. The next time we came all the way down here, but looks like there were a lot of buyers and they just pushed price right back up. This time, it was a little bit lower. It didn't go all the way down, and as you can see that it's getting shorter and shorter. So what do you do with these areas? You draw your zones. Okay, so this would have been a big zone, right? And then once you saw that price came around here and we bounced, and the open of the candle is here, then you draw your next zone. Okay, and then you can see that the buyers came in here, so you move this candle here, and you move this up here, okay? And buyer stepped in here, and you draw your next candle. Okay, are you guys understanding how we are analyzing where the buyers are and how we're drawing the zones? So these are just called the zones. Some people call it supply and demand zones. So this is how you're going to draw your zones, and you're going to be able to see what's happening with price. Okay, and every time, now since we bounce from here, we had a bounce here again, and now this area is getting weaker because we can see that the buyers started moving up and the area started getting weaker and weaker, and now price is going back down. Okay, so look, finally, they played games, and we are now dumping. Okay, we are going far away. So they opened the candle on the SPX. They opened the candle here, went up, and look, now they're finally going down. So now it looks like they're going to go for this gap fill, the 55.25, and if it breaks this, then we can go 550. Okay. All right, so let's go back to the Bookmap. So what you're looking for is this live. Okay. What are you going to be looking for in Bookmap? Once you are in these market conditions, if you're looking for scalp, you're going to be looking for these high liquidities areas, because this is not that high liquidity. You're going to be looking for those thicker clouds, okay, which we could see right here. Okay, you're looking for these type of clouds. Okay, so once you see the first touch into these clouds and you see a rejection, that's when you want to take a put. Okay, that's where you take a put, and you want to set the stop, your put stop, right above this liquidity. So you set the stop right above this liquidity, because if this liquidity breaks, then buyers take over. But since there's a lot of sellers, you put your stop above, and you ride towards the next liquidity, which is around here. Okay, as you can see, there was a lot of buying liquidity here on the NQ, and once we hit this, we went up to hunt for the next liquidity. Okay, so this was your first entry, right? And you set your stop below, and as soon as it goes up towards this liquidity, you take your partials, and your second stop, your stop is still here. If it goes up, right? If it goes up, you have to be watching these orders. These orders need to start adding higher. Like these orders need to start moving. And looks like that's what happened here. A lot of orders started adding here, and then price was able to go up. And once you see the orders start adding here, that's where you want to move your stop to. Okay, so you move your stop here, and then um, you let it ride. And if these orders keep adding up, then you just ride that wave and you keep adding the stop under the liquidity. Right? Does it make sense? Making sense, guys? Wait, why did you Mike? I did not tell you to exit the trade at break even. I told you to hold the trade as long as we're under. There was no reason to sell it. I said as long as under 555, you're fine. You can't get scared, like that. That's not how. Scared money doesn't make money. Now we're far away, so if we come back up and we bounce from here, that could be a good entry for a round two of puts, because now we're at 552, so we're getting back in this range. So bounce will be good. If not, it's going to go towards this, and like here, like I literally told you to, you would have been up really nice on this trade. And I said that it's going for this liquidity too. So okay. Just watching this. Okay. So yeah, for the Bookmap, that's how you want to watch. Right now, you can see that the market, right? You don't see that high cloud, right? So what is market doing? It's looking for liquidity, and you see where the high cloud is showing now. It's showing around here. So the algorithms, their job is to hunt for this liquidity, and that's what it's doing. It's hunting for this liquidity. Seller pressure is still here. There was this high liquidity here, and looks like we went down, and we broke through this liquidity, okay? And sellers just kept adding more and more, and it's going for the bigger liquidity, because looks like this liquidity is a lot bigger than this liquidity, right? Because you can see this big stack compared to this one, so the sellers went more and more down. So where the price is going, this is where liquidity is, and this is how I take partials with the AI trades. Okay, I'm taking the partials based on where the liquidity is, and once I see the liquidity and price is getting near there, I take partials and I raise my stop. That's how you maximize profit. Okay, and once you see the liquidity break, then I will add the stop above the liquidity break, and that's how I ride it. Okay, so always be watching Bookmap when you get those SPY SPX trades, and that's how you can maximize your profits and enter and exit better than me. And once you see that if AI sent out an alert, you can look at the Bookmap and you can see like, okay, this is why AI sent out an alert, because if the price is here and you see a lot of liquidity here, and you're like, okay, it looks like AI is looking for this liquidity, so I'm going to enter this trade. I'm going to set my stop here, and if I just see the orders and everything is keep moving down, I know that this liquidity is getting tested.
Oh, that's
Okay.
division. Nice. Thank you.
What? Wait, what happened? Okay. All right. So yeah, we were expecting, so since liquidity is buyers, right? Remember how I was saying that I'm expecting a bounce over here? I was expecting a bounce. The reason I was expecting a bounce because of two things. And let me explain that. When we go in the 10-minute, we are going to open on all our EMAs, which is 5, 9, 21, 5, 9, 14, 21, 50. Okay. Once you see a price drop, we have a massive drop on price, and the EMAs are far. The 5-9 are the momentum EMAs. When price goes too far away from the EMAs, algorithms will go back and test it, which aligns with why we are bouncing near this liquidity area, because the algorithms are going back and testing, and look how liquidity is moving up. When the liquidity keeps moving up and these buyers keep stepping in and the liquidity keeps moving up, that means it will go up even higher. Okay, because in order for price to go down, this liquidity should not move up, and these sellers should be confident enough that, hey, I'm confident and I'm going to keep my orders here, and when the buyers come in, I'm going to absorb them and we're going to go back down. Okay, So if they keep moving orders up, they're not being confident. Look, you see what happened? They just, when they saw big buyers step in, they just moved their orders up. Okay, so they went back and they tested the EMAs. Games are being played again, and that's how, like we were saying, that we would have raised our stop based on this liquidity right here, and then we saw that there was some liquidity here. We would have raised our stop, and as soon as the price went back here, our stops get hit, and we're out of that trade. And look what happened after that, buyers came in. So this is how you maximize your trade and you maximize your profits. Okay, let's see. Okay, so looks like that bounce also happened because there is some news. We agree to stop fighting in Ukraine, but it should lead to long-standing peace. Russia and Belarus are ready to take military and diplomatic measures in response to NATO actions. Okay, so some news coming out. So we're having a bounce. So this is good, Now we want to see what kind of rejection we get. As long as momentum holds, you can get another entry for puts. We've gotten close to the 550 area on SPY so many times that we need to see some kind of move. Okay, any questions for Bookmap before I go to the next thing? No questions.
No question on my end.
Okay.
So Chad, just one question. In
Yeah.
current Bookmap, right, you see the liquidity at 5530, right?
5530. Yeah.
Yeah, so I mean, why didn't the market come down even further to grab it, right? Why did it go up?
Okay. So you see that there was some liquidity here, right? And then you see how there was some liquidity here, and how this liquidity is moving up and down. Okay. So when we were around here earlier, there were a lot of orders. Okay. So what happened is they moved the orders up, and sometimes they do that if they want to buy early, or sometimes in this case scenario, the news came out. Okay, so when news came out, they took out this liquidity and they moved the orders up. And now if you see, when the price is coming down, it automatically starts moving towards this liquidity. Whoever this buyer is, this main buyer, the main order is still sitting there, and they want to buy here. They're like, I don't care if the market is going to crash or whatnot. I'm going to have my orders here. And all of this is added liquidity that is moving up and down. Okay, and this buyer could be like, okay, my main order is here, but I'm still okay if some of my order fills within this range. Okay, so they can move these orders. So always watch the liquidity. And like we were just talking about earlier, that if the sellers were confident enough, they would keep the orders where they were supposed to keep it. And these sellers are confident that they don't want price to go above this, and everything in between is just noise. Okay, so once you see the first touch and you see a response, and you see buyer step in, that's a good sign the price is going to go up. So right now in the middle, you don't want to be taking a trade, because you want to take a trade when the big cloud gets when the big cloud touches. So once news comes out, all this basically gets invalidated, and you just want to give it some time and let price action to figure out where it wants to be, and then look for the momentum. And look for the momentum, and to see if the momentum is holding. As long as it's holding, then you can do it. What?
Está bien. Hey, era de esperarte, güey.
Okay.
Puras fallas, bro.
Why is people?
They ain't got shit, dude.
How do you mute
Hey,
him?
what the fuck?
Okay. I don't know. Did I server mute him? I'm not sure if I did it right.
Fucking America came with everything, bro. Nah, fuck that shit.
I muted him, so I don't know what he's saying. Okay.
Yeah, thanks, Jack. Sounds good.
Okay, is it making sense? So what's happening right now? All this in between is games. Okay, algorithms are trying to fill both sides, and they're just filling liquidity, and both sides are just making money. And both sides are making money in between. Okay.
Yeah. Okay.
All right, 1 second. I gotta check something. Sorry, guys. 1 second. I gotta do something. Okay. No, you're not muted. Okay. So all in between is just like I was saying, just orders are just trying to get filled. Okay. So now we know the main liquidity is here, and the main liquidity is here. So this will be considered the first touch. You want to trade the first touches. So once it goes back up here and rejects this, you want to take the trade because it's getting thicker. And since this one I would say is invalidated because news came in and buyer stepped in, but you can see that these orders are a lot bigger than this order. So some of these orders looks like went up and it got filled. So this could be most likely be broken. Okay, and if it doesn't break and it spends a lot of time here and it bounces, then just let it bounce. Okay, based on the context. All right, so like we were saying that the momentum is going to get checked, and the momentum got checked, and we are seeing a rejection here. So this was your other entry for this trade right here. Once you saw the momentum was rejecting and momentum is holding, so that's your another entry for this trade. Okay, is it making sense? Any questions before I go to the next thing? Okay, no questions then. All right. Last thing we're just going to go over is this. Usually, you will see that the charm data, the numbers will be orange. Okay, these numbers get orange when it's above 2,000, but since the contracts are so expensive, right? Look how expensive these contracts are. You won't see much orange because it just costs too much. Okay, so whatever numbers you're seeing when the premiums are really, really high, just 2 to 3x them, because on an average day, that's what they would be. So technically, this is like 3,000. This would be like 3,000 as well. This could be like 4,000, 4,500, and then you can see this too. And then, but just try to see where the most of the orders are. So if you see the call side, you have these numbers, and the put side you have this. So if you look at all this numbers, looks like the put side has more activity, and we know that based on the price action as well. So the activity is more in put side. Charm is really, really good, but we want like average volume and a lot of activity. But since liquidity is low and they're creating liquidity, they are setting these traps. Okay, so they're just going up to these 5,600s and they are buying and selling. So I'm going to make another video on, we'll do another live session on Charm when the market stabilizes so we can analyze and trade it better. But for now, since the market is like that, just when you look at this data that I'm sharing, just look at where the activity is going on, and majority of the activity is on the put side. Okay, so we won't be able to go higher to these levels until we clear out 5600. So once we clear out 5600, then we can look at these levels, and these levels increase, then we can go higher. But until we don't clear the 5600, the sellers are still in control, because when we were going up there, we were rejecting, so the sellers were keeping the price in check and we were just coming down. Okay, so I'm going to keep that charm pretty simple for now. We will do another session for that one.
Can we use SPY in lieu of SPX for charm data?
Wait 1 second. You say you want to use SPY for charm data?
Yeah, since it's not flagging, it's easier to see, I think, on SPY right now. It actually is lighting up orange for the charm levels and whatnot.
Yeah, so SPY you will see that, but when the balancing happens on SPX. Okay, so yeah, you can see all this data, but you see there is so much value, there's so many numbers here, and we can see that the activity is going up, but this is also going up because some of these contracts are very, very cheap, so this is going up. But SPX will show us true value because that's where the dealer comes and balances later. Okay, so in the indexes and all that stuff, that's where the balancing are happening. So which is why we watch SPX. SPY, there's so much going on. There's so much activity going on, and that's what will confuse people. Okay, because you can see there's 22,000, 22,000, 60,000 here, 18, 18. So there is a lot of activity. Price can go anywhere in this area, but SPX makes it more clear because we can see where the big guys are. We want to see where the whales are. We want to see where the market maker or whatever, where they are buying, and we can see like right now the 5,500 is the active area, and that's what they're looking for, because this is a lot of volume. All right, any more questions, guys? This was a good entry. I wonder if anybody took it, because we talked about this, the EMA rejection. Okay, that's fine. Supplies is getting closer and closer, so we should be looking for.
Quick question on that, on retaking that entry on the rejection of the 5 EMA. Would you take that even knowing that it's still that wall of buyers down there on Bookmap? There's still a wall down there, right? Like that.
This one?
Trade had to get, yeah.
Okay, yeah, I was still, because there's still liquidity, and we can know the sellers are in control because they added all these orders above, and the EMAs are telling us that this is a pending level, because if you look at the hourly, sorry, not even 10 minutes. If you look at the hourly, we can see that this is a big pending level. A lot of buyers came in, so we know there's a lot of activity here. So when the EMA are telling us that the momentum is still holding and we're going down, right? And we have all these buyers here, and then SPY, we can see that we have all this liquidity down here, right? These buyers stepped in, and we have the pending level 550 that we were looking for, which we never came, which is a bigger psychological level. And you have all these buyers here and liquidity here. On top of that, you can see that there's liquidity here, so it all adds up. So why would you not take the trade? If momentum is holding, the price is holding, we are now spending more time below the 555s. So if everything adds up, you want to be looking at. Which image reduction are we looking at? We're looking at momentum. So 5 and 9 EMA is momentum. So momentum is holding, you want to hold too. Momentum is holding, you hold your trade. So once you saw a big rejection and the price is now below, and we were talking about how we want to be below 555, we want to spend more time. We don't want to get trapped like how they were trying to do with us yesterday in the 560s. We want good price action. So once price went below 560s and we spend a lot more time below, then we can get more natural price action. That's what we're looking for. So if news didn't happen, we could have probably already seen 550 by now.
Got it.
All right. Okay. Any more questions before I get back to it? Yeah, it's hard to hold, which is why we are setting our. So yeah, the question is like I'm finding it really hard to hold recently with all the random news. Yes, with all if the news is coming out and we're setting our stops and we get out of the trade, we can always get back to it because we have to look at the context and we're like, okay, sellers are still in control, manipulating price. I'm going to look at the EMAs. I'm going to see where the price is going, what the next pending levels are, and I'm just going to trade that. So you just have to look at the bigger picture, and you can always get back into the trade. That's just what the market is right now, and that's what we have to adapt to, right? So now we are down the EMA. So let's see if we go to 550 first and just hit that level, or are we going to go back test the EMAs? And the EMAs is still pretty far, in the 10-minute. So you just want to, if the price starts going back above this, it's going to go back and test the EMA for momentum and then go down. You usually want momentum to be pretty close to the price to the candle. So if it's not, then expect a bounce. Okay, and if it bounces, just make sure the 5 EMA is holding for continuation, or even the 9 EMA. But in this case, you wouldn't want to watch in the 9 EMA because that's where most likely your entry was and your stop would get hit. So you would be looking for the 5 EMA to hold, because when the price goes down enough, you can expect something. And we can look at the Bookmap how all the buyers are stepping up here, which is another reason we are bouncing. So you got to put all of it together, and that's how you see things, and that's how you're able to take trades and maximize profits. So if this was your entry right now, you'll be taking profits and you're raising your stops. All right, make sense?
Yep, makes sense. And then 550, if price does break through, 550 would be considered first touch. Correct?
Yeah, 550 we would consider first touch, and we would be looking to buy calls. We will just take starter calls there, in case they set up a trap and they go to 549. They could do that because they've been doing that. They could go to 549 and then just bounce. So we will just take a starter call at 550. We will look at Bookmap, and if you're seeing liquidity there as well, that's good. But if you're seeing that liquidity is a little bit lower than 550, then we can be like, okay, you know what? If you're like, okay, you know what? Like this looks like a trap. So I can just wait a little bit longer. But unless if you start seeing that the liquidity starts moving up at 550 or the 549 area, it starts moving up, then you can be like, okay, you know what? They're just trying to buy in early.
Gotcha.
Yeah.
Cool.
All right, guys. I'm going to then upload this video, and then we can do, once the market stabilizes, we will do another live session so we can combine charm as well. Because once we combine charm and the charm data is, once you start seeing the orange numbers, the trades get a lot better, and we are able to maximize on these trades, and we can get huge wins because we were just going over those big AI trades, right? That we used to get, that we were talking about. Just going back in time. With these AI trades that we were getting all these like 300%, 500%, we would get all these massive trades. The reason you would get all these massive trades is because the charm data, and AI is able to read this charm data to analyze what the price is doing. But if you look now, the 5620, it went up, and this went up too. So once it goes above 2,000, it goes up. So this is probably like 4,000 on an average day right now, or 5,000. This is probably like 5,000 as well. So 5620 and 5520 and 5500. So if we look at SPX, what level is this? Low is 5530. Okay. So why are we bouncing at 5530? Let's look at 5530. We can see that this level, if you were thinking of this as like 2 times, it's probably going to be 1,000 here, 1,000 here, 1,000 here, right? So then these are considered dead zones, because you technically want above 2000 in order for charm to act as a magnet. So right now, since we are getting these two areas that are magnet, and you can see that this is still considered a dead zone, the only way we can go down is with volume, okay? And the volume won't come in until we break the liquidity, okay? So once I share the charm data, analyze, okay, the reason we're not going down first is because, I said that on when the contracts are expensive, just 2x this number, and the contracts are normal, then just follow what it says here. So these are considered dead zones. These are also considered dead zones. Only way we go up to these magnet areas is if volume comes in, and the volume is not coming in. And once you analyze that, once you've read that, then you look at Bookmap and you're like, okay, the volume is not coming in because we don't see a big red cloud here of sellers, and we see a big cloud of buyers, and there's a lot of buyers stacked up here, and they're just playing games. And we can look at the NQ as well, that the buyers are here, and price is just now trading in between. Buyers stepped in, and you can see like some of these buyers stepped in early, and so there's a big cloud. So until this area doesn't break, we're not going to go down towards the next magnet areas because we have buyers stacked up. And I'm not going to take a trade here. I'll wait for a trade until this liquidity breaks and we can stay below this. Then I can take a trade and I'll know that we will go to the next liquidity zone. Or if we start seeing a big red cloud forming up here and a lot of sellers stacked up and they're not moving the orders and they're saying confident that, I'm going to, let's just say they put the orders here and I'm going to stay around here and I'm not going to move orders, and I'm a confident seller that once the price comes here, I will absorb all the buyers and I will dump on them, then you can take a trade here and you'll hunt for this liquidity again. All right, makes sense? So that's how we have to read the market. Market is always adapting and changing, so we have to adapt with the market and we have to trade what we see. And look what's happening here. 5 EMA getting rejected again. So momentum is really, really strong, guys, but you just have to correctly read it, and you only read the momentum once the price is respecting it. Okay, so once you see that we are getting out of our range, like in this scenario, the range was that we wanted below 555, 555. Once we were below 555, we wanted price to respect these EMAs to see continuation, and it did here. This is new, so even then it still did, but then you can see the next candle, and this candle is still respecting because right now there's no news. Okay, so you can't just be following the EMAs here because technically this is not being respected. This is just a random candle that did not respect none of the EMAs. You can't follow that. Okay, what indicator for EMA do I have? It's called EMA 7. So if you search up EMA 7, it will come up. It has the EMA and the moving averages, but I don't use the moving averages. I just use the EMAs, and these are the 5, 9, 14, 21, 50, 200. All right, guys. So yeah, I will upload this video so you can rewatch it, and then we will do another live session once you guys have absorbed this and you understand what's going on and how you can also take your own trades and what the AI is doing, why it's doing it, and how to read the data that I'm also posting. All right, see you guys.
Thanks, Jay.